Now, today's such a bad day out there for countless stocks that it's even holding back ELF on a shelf, which we just crossed a 1,700% on ELF. I mean, absolutely incredible. Stock's up 15% today. If the market was just decent today, this would have been a 20% plus mover, but 15%, I can't complain on this one. Absolutely insane. Their numbers are ridiculous right now. Somebody said something interesting. They're like, it's crazy to be up that much in a stock, and it's actually still a buy. And the more I thought about that, the more I'm like, yeah, that's true. I mean, I've been up such insane percentages on ELF for a while, right? I mean, insane percentages meaning 1,000% plus. And ultimately, it's just been actually still a buy. It's the craziest thing to think about. It's a hard thing to wrap your head around when you see a stock like that. But at the end of the day, remember, there's people sitting on AMD shares that they're up 5,000% on right now. There's people sitting on NVIDIA shares right now that they're up 10,000% on. There's people that own Tesla stock that are sitting on gains of thousands of percent. I own shares personally that I'm up 1,000 to 2,000% on, right? So that is something to keep in mind. Now, in terms of why the stock market's down huge, in kind of my perspective on all this, and do I think this is going to continue in my views on all this, this is why, okay? So, Fitch downgraded U.S. long-term rating to an AA plus from a AAA, right? Now, I called this out in last night's video I put out on the main channel, or I should say yesterday's video on the main channel, right? And I said, something like this is going to be a boogeyman in the market, right? It's not as scary as probably in 2011 what happened, but it is going to be, something that just gives concern out there for a lot of folks. Now, the interesting is I've seen a lot of people kind of dogging this move in a substantial rate, right? Look at this. Fitch vying for credibility with U.S. rating downgrade. And so basically just saying Fitch is just trying to stay relevant any way possible. And when I think about something like that, right, usually I would kind of side with it, but I don't know if I'm really siding with this. When I look at what Fitch wrote here, I don't know if I can really say this is just Fitch, vying for credibility or something like that, because I heard a lot of people poke at this. In Fitch's view, there have been a steady deterioration in standards over governance over the last 20 years, including on fiscal debt and debt matters, notwithstanding the June bipartisan agreement to suspend the debt limit until January 2025, the ratings agency said. Fitch also highlighted that the rising general government deficit, which it anticipates will rise to 6.3% of GDP in 2023 from 3.7% in 2022. That's huge, okay? That's a huge move. Cuts to non-defense discretionary spending, 15% of total federal spending, as agreed in the Fiscal Responsibility Act, offers only a modest improvement to the medium-term fiscal outlook, Fitch said, right? I can't disagree with that. I don't think Fitch is grasping for straws here. The government, constantly pulls this game of let's push this debt agreement till the last possible moment. I don't think it's a good look. Obviously, government deficits are in a bad spot. I don't have a problem with Fitch making the move it made. As a United States citizen, I understand it. And I don't think this is just them vying for credibility. I really don't, okay? That's my personal stance on this, right? Now, overall, this is a great moment for the market to catch its breath, and that's how I feel about this, right? The market's been up in almost a straight line, and so I think this is a very, very healthy thing for the market to overall catch its breath. Now, in terms of, I had to come inside, it was getting a little noisy out there. So this is a look at the public account this year, right, which is up to $1.8 million or so. This is a year to date, okay? Right out the bat this year, we went on a massive sprint up, right, and climbed several $100,000 very quickly. Then we kind of had this time period, SVB and all that drama, and then we got ready to go on another huge sprint, which we climbed, this account has climbed probably about $500,000 since right around here, right? If not over that. So the thing to understand out there for everybody kind of watching this in how to approach this market moving forward, okay, here's my 2 cents. One, root for the market to go down short term. It's going to present better buying opportunities if that was to happen. 2, make sure you're a little hedged out there in the market, just a little bit. A little bit goes a long way. If you're talking about any sort of substantial drop at the end of this year or in 2024 or something like that, a little hedge is very nice, okay? And it's a very comforting feeling. I don't worry about market drops even. 1, I know I always have some cash around. 2, I know if the market drops in any substantial way, my hedges are going to make a lot of money, right? And 3, this is, we need some of these kind of pullbacks because I can tell you the market's been so red hot this year. you need some nice breathers. And sometimes these breathers last a day, sometimes they last a few days, sometimes they last a few weeks, sometimes they last a few months. And it's a very natural thing in a bull market to go through. And so don't fear it, just embrace it. Starbucks, really? They just reported earnings and the stock's moving 1%, one flip and flapjack in percent. Are you serious? I got to say, Starbucks numbers are extremely impressive, folks. Extremely impressive. Okay. So check this out. So North America, very impressive numbers overall. Comp store sales were up 7%. Now, this is the one troubling thing, change in transactions. Transactions were only up 1% on a year-over-year basis. That smells like maybe competition a little bit. Maybe competition, there's a lot of coffee shops popping up all over the place. Obviously, I feel like Dutch Bros could be the longer-term major competitor to Starbucks in the United States of America, but every day I hear about it here in Vegas, like a new coffee shop opens up, and my wife's like, oh, you see that new coffee? So I don't know, okay? That's a little troubling. That's the one troubling number, one of the very few troubling numbers I even saw in any of Starbucks-related numbers, right? Change in ticket up 6%, which you kind of expect in a higher inflationary environment, right? Revenues are up 11%. Operating income, usually want to see that up roughly the same as revenues. So that was up 10%. That's good. Operating margin, kind of, we can call it flattish year over year. International numbers are simply shocking. Comp store sales up 24% on a year over year basis. Flip my flapjacks 3 or 4 times. What are we talking about here? Okay. Change in transactions up 21%. Change in ticket, surprisingly, only up 2%. That's interesting. Revenues up 24%. Operating income up 177%. Operating margin up over 1,000 basis points on a year-over-year basis. You gotta be kidding me, okay? You gotta be kidding me. The numbers overall, this is beautiful. I mean, if my companies can do this, I'd be very happy, okay? Total net revenues up 12.5%. Guess what net income was up? 25%, okay? 25%. So, and by the way, operating income up 22+%. That's amazing. Like, if you can grow your bottom line at a much faster clip than your revenues, you're winning. You're winning, okay? Incredible. But why is Starbucks stock down 1% after hours? Why is this stock not up big? I'll show you exactly why, okay? Starbucks trades kind of rich, okay? Based upon this year's numbers, expected numbers, they trade about 30 times. And based upon next year's earnings numbers, they trade about 25 times roughly. And remember, Starbucks is a company that they've built so many locations over time. Like, you could always find a new location somewhere for a Starbucks, but I'm just telling you, like, the big days of location growth are behind Starbucks now at this point in time. So where they're going to boost their revenue up, if they're going to boost their revenue up, is really going to have to come from existing stores and continue to put out great comp store sales quarter in and quarter out, year in and year out, right? And they're going to have to sell their customers more stuff, or they're going to have to raise the price of their product. So that's the one problem with Starbucks, okay? That's not a problem you had 10 years ago. That's not a problem you had 20 years ago. Back in those days, it was like Starbucks has so many locations to grow in the United States of America and international that it's just like the world is theirs. Now you look out, the location base is so big that the percent they're going to be able to grow locations over this next 10, 20 years is going to be very, very small. So that's a troubling thing. And obviously, like I said, in North America, I feel like they're going to have more competition than ever. Okay.